Live. So we are live, I understand. It's my great pleasure to welcome you to this panel session that we have organized for the SET week. We are a panel of 5 here, and we're going to discuss the energy transformation, the why now, what are key trends, what are some great examples, and what is the role of startups. Before I introduce the panel here, let me very briefly introduce Emerald and also the key topics that we are going to discuss. With Emerald, we have been around for 20 years. We have Emerald is a venture firm focused on industrial innovation, Europe's oldest venture firm focused on industrial innovation, with obvious specialty areas, including energy. We have just closed a water fund, but I think what makes Emerald really special is a team of amazing sector specialists. And 2 of those sector specialists are here with us. They typically have 20 years experience in relevant domains and look together at a deal flow of about 1,500 startups every year to invest obviously in those that are most promising. But more than that, what we are doing, and that's the plan also for the Global Energy Transformation Alliance, we work very closely with our investors, not only on the investment side, but we make sure that we maximize strategic value for our investors when it comes to those this deal flow. And I'm delighted to have our first investor on the panel with Liew, and obviously we have also a great with Tim Heal, a great disruptor on the panel. Now let me quickly summarize what we see as the key trends for the transformation. First, it's one thing to say, and I think it's quite common ground now in the industry, that the 5 core topics are the D3s, obviously decarbonization, massive ambition in that space, the whole decentralization, digitalization, and on the other hand, also on the positive trend side, the electrification and green molecules / hydrogen. Another way of summarizing the same 5 trends is, and that's really giving us the reason why the industry is now so focused on this, is there is massive risks and massive opportunities. On the risk side, it's obviously on the decarb side, the carbon asset exposure, it's cyber risk, it's disintermediation risk, but on the opportunity side, equally important, we have electrification, massive electrification opportunities, not only on the mobility side, on the heat side, metal side, full industry wide electrification going on. And then obviously with the hydrogen pressures accelerated by recent COVID context, through all the political announcement that we have heard with the hydrogen context, there's even yet another big volume opportunity. We're going to discuss some of those critical risks and opportunities, and now it's the time for me to introduce the panel. We have with us, I mentioned, we have with us on the one hand 2 sector specialists, and I first start with our guests. We have Liew. She is a Vice President Innovation at Singapore Power. Thank you very much for joining us here. We have Tim Heal, Director of Strategy, as one of the fastest growing disintermediators, certainly in Europe, Octopus Energy. And on our sector specialist side, we have Balas. He is energy IoT transportation sector specialist, and in energy really relevant, he is our key person to look at renewable integration and EV charging as 2 key issues. And on the other side, we have Dr. Philipp Hasler. He's an investment director at Emerald, and his hot topic areas are hydrogen and also storage. He has been looking at deal flow for 20 years in this area. My name is Christoph Frei. It's not my first SET intervention. I've previously been under a different hat with the World Energy Council to join SET, and it's my great pleasure to now kick off this panel. I would like to first give all panelists a quick intro to present some of what they think are the hottest examples they are busy with in the context of those key trends. Let me start with Liew. Liew, please.
Sure. Thanks, Christoph, for inviting me to this panel. I'm deeply honored to be here today with you and the other panel speakers. So allow me to introduce myself. I'm May, and I head Sustainability and Innovation at Singapore Power Group. We are a leading utility company in Asia Pacific. We own and operate electricity and gas transmission and distribution businesses in Singapore. We also operate in Australia and China. I lead sustainability innovation for the company, and my goal is to accelerate new growth in sustainability and global startup engagement. So innovation is obviously, very important to us, and especially during COVID pandemic, there is actually a call to accelerate energy transition. Over in Singapore, we aim to peak emissions by 2030, and by 2050, our country aims to halve the amount of emissions with the goal of achieving net zero emissions in the second half of the century. Within this changing landscape, my company, Singapore Power, has been taking steps towards transformation, focusing on two key parts of the business. One is our core business, which is the grid, so adopting new smart grid technologies, for example. And the other is a new growth area, which is what we call sustainable energy solutions. That includes initiatives such as electric vehicle charging, solar voltaics, especially in our part of the world, and last but not least, digital and smart energy solutions for our retail customers, which Christoph has asked me that I focus on. All right. So I'll just speak a little bit more on that. And why that's important to us. So SP has a nationwide reach to households and individuals. And because of this, we are doing our part to raise awareness and provide low carbon solutions. We have a utility app which allows our customers to check their electricity usage in near real time. And we have recently enhanced the app with sustainable solutions for our customers. So our utility app has become a sustainability app. And on our app, we have a carbon footprint calculator that allows our customers to take stock on their personal carbon emissions. So by answering a short quiz on lifestyle choices like how you travel, what kinds of food you eat, the calculator informs you of your personal emissions. But beyond raising awareness, we want to spur people into action through a feature called Green Up. And this asks our customers to take on sustainable challenges such as reducing their electricity usage or saying no to paper bills, and from that they can earn reward points. I also like to speak on an initiative that we launched just a few weeks ago, which we call My Green Credit, and this allows our customers to purchase renewable energy certificates to green their monthly electricity consumption. So our customers are able to choose from a list of renewable energy projects to buy RECs from. So for example, we have a solar rooftop project on Jurong Island, which is the oil and gas hub of Singapore. And by buying RECs from this project, our customers can support the decarbonization of a very heavily industrial part of Singapore. Now, our app is also the charging and payment gateway for electric vehicles. Singapore Power is looking to deploy a nationwide network of electric vehicles, and our customers can easily locate the nearest available charging station through the app when they are on the go. Last but not least, Singapore Power is currently collaborating with the Singapore government to develop the country's first smart energy town. So residents can look forward to living in an eco-town that is powered by integrated digital solutions. For one, we are putting in place a centralized cooling system for residential units. So residents will get to benefit from an energy savings of about 30%. The system uses an efficient chilled water cooling system with economies of scale. And this is especially meaningful in tropical Singapore, where air conditioning can account for more than 50% of total building energy consumption. And with this centralized cooling, this smart town will be able to achieve a lower carbon footprint, which equates to energy savings of 30 kilowatt hours per year. This smart town will also be equipped with vertically deployed building integrated photovoltaic systems, which is very important for a very vertical city like ours, and electric vehicle fast charging hubs. So digital benefits will also extend to town operators to keep common facilities running smoothly. They will be equipped with AI-enabled digital township platform, which centralizes the management of the town's energy systems. So I hope this illustrates, how we are as a company committed to bringing our customers along a low carbon journey. And of course, we do this not just ourselves, but by partnering with a whole ecosystem of partners like startups, our VC partners, and other corporates. Thanks,
thank you very much. I was always very impressed with Singapore Power in the sense that you have ambitious decarbonization objectives. You obviously don't have the surface to run big renewable projects. You have very clearly emphasized a digital strategy. You have massively invested in a digital team. And I think what you have just described is in terms of how you reach out to your customers. There is competition in Singapore. It's one way of making sure that not only you create a platform for your customers to love your brand and get all kinds of things that they want they want in terms of energy services, but obviously it makes you better understand your customer. The key question here is obviously how many customers do you see really engage? What is your experience in terms of how long it takes until you get customers really in your platform?
Yeah, sure. I think that's a really good question. I mean, the question about for customers, I will segregate them in terms of corporate customers and residential customers. These are the two market segments that we serve. With corporates, we're beginning to see many corporates, led by RE100 companies, and and many of them have a base here in Singapore, who are leading the charge for consuming 100% renewable energy. So that's a very important corporate customer segment of ours. And many local companies are also coming on board, seeing how this is a very important driver for the likes of Google, the big companies that are in Singapore, and emulating the good work that they're doing to support renewable energy. On the retail customers end, it is coming up because the rise of consumer awareness for the need to support renewable energy, the younger generation who are not just consuming electricity from a utility company, but they also want to support green electricity. It is coming up. I would say there's a lot of consumer awareness that still needs to take place, but we always feel that we need to be able to lead the charge in terms of introducing new solutions to our customers, and hopefully they will come on the journey together with us. So we do invest ahead of time. The market may not be here today, but we do believe that leading the market is where we want to position ourselves.
I think what you're implying by what you just said is you're much more refined already as an energy company in how you look at customer segments, and certainly understanding those different customer segments and addressing it with different value propositions, exactly what you're doing through your platform approach. I want to move on. I think in a way we have heard, this is, to me, Singapore Power is an archetype of a digital transformer, as an energy company. I want to, and obviously from an incumbent perspective, and we go now with Tim Hill and Octopus Energy to a company who's coming from the other side. You started with 0 assets. You had you came up with a purely virtual platform, and you are today, I believe, the fastest growing disintermediator in Europe, at least, if not worldwide. Tim, tell us more about how you do it, how you did it, and what is on your project line next.
Thanks, Christoph, and thank you for having me here. It's an absolute pleasure. I really enjoyed listening to May, actually, and the innovation she went through. Perhaps I will take a slightly different tack and tell you a bit more about our company and a journey, and then I can come to some examples of what we've been doing maybe later on. So my name's Tim Hill. I'm the Director of Strategy at Octopus Energy. Let me give you a brief overview on our company and how we got started. So our founders were technologists. They built e-commerce platforms as well as marketeers, and actually from the consumer finance background, so not from the energy sector. And I think it's interesting that when you look at disruption in any sector, you often see that people come from outside that sector as part of the kind of founding team. The thought process behind Octopus Energy was in some ways quite simple. and the themes you'll be all familiar with. So energy retail is a massive sector globally. I mean, possibly worth $2 trillion. And the vast majority of that business is transacted on technology platforms, which are fundamentally, a couple of decades out of date. The customer experience is often poor. It's not always poor. I think it's a mistake to sort of claim that for all incumbents. But if you look around the world, you'll see that customer experience is often poor. Customers of in historical energy contexts, being almost considered as off-takers of energy who you then have to go and collect money from. So it's not been a customer-centric industry. I'd also know that energy retailers often have very high cost bases. We've seen here in the UK, 20% of revenue for the total cost stack. You compare that to a company like Amazon, which is 2% of G&A, and you say, what's going on here? Why is it so different? And then the final component here is that, we have this, as Christoph said at the beginning, gigantic transformation in front of us, which is full of threats, but also full of opportunities. We have to decarbonize energy. We have to decarbonize our grids and heating and transport. We have to do it very, very quickly, possibly mostly over the next decade or so. So the opportunity to use technology to disrupt this market is absolutely enormous. Now, we've developed a platform called Kraken. It's an in-house technology platform, and that's now been licensed externally as well. And our retail business in parallel has grown very, very quickly. We're about, I think, 1.7 million households in the UK now, which is approximately 5% market share. And we've done that over a period of 4 years. And the vast majority of that growth has been organic as well. So it's been customers actively joining us from the market. So it's been very quick. We've also expanded into Australia and New Zealand, being markets that are relatively similar to the UK, Germany and the USA in the last couple of months. We're looking actively at a number of other markets. And we've set up a range of other businesses, including electric vehicle leasing, EV charging networks, smart metering, home installation services, and even an incubation business, funnily enough. Despite being a startup ourselves, we've actually have an incubation business that hangs off the startup. And that's a kind of commitment to decentralization that we have in our business. Very quickly now, so let me see, we raised a few $100 million in May from a company called Origin Energy, which is Australia's largest integrated energy provider. And we declared an intention to get 100 million customers on our platform by 2027, which might sound totally bonkers and like we're smoking something, but actually the contracted customers we have today is around 15 million accounts. So already contracted, we're 15% of the way there. We've got 7 years to get the rest of them, and actually we want to go much further, because really what this is about is it's about transforming energy and doing that globally. So, I mean, I can talk more about the business, but maybe let me just stop there, because that's obviously a lot of information. And
Tim, absolutely impressive. In 4 years, from 0 to 5%, 1.7 million customers in the UK, and obviously global ambition here. Very impressive trajectory. Now, tell us something about why would, and you mentioned Kraken, why would a customer, you mentioned the sometimes not very service oriented, and we have heard another example from the MAU side before, but why would a customer see Kraken and say, that's it for me? What makes the customer really pick up on your platform?
Yeah, and so, well, let's talk about kind of retail customers rather than our licensed customers who are other energy retailers themselves. But from a retail customer perspective, what they see is not Kraken, but they see Octopus Energy, and I think it's a few things, right? First of all, we have our pricing is set at the kind of fair, sustainable level. So what you often see in the energy retail sector is people acquire at prices here, and then over the customer's lifetime, they manage the price up in order to get more margin out of them. And this is a very common pricing tactic used around the world. We basically fix our fees at a certain kind of level, and we keep them there. And we can do that because we have a much lower cost to serve than our competitors. But we have the lowest cost to serve in the UK. And the reason we have a low cost to serve is because we use technology to automate a bunch of stuff, whether that's self-service from the customer or whether it's just actually allowing the operations agent to do more with the platform rather than have to chase things around several screens and do 10 different things to get a single action done. It's all kind of linked and continuous. But I think also what customers see is they sort of see genuine purpose in the brand, and that we actually have customers' backs. And I think this is where the difference between kind of what you say in your kind of marketing and brand and actually what you do in real life. And so when you make decisions that genuinely are in favor of the customer, so you don't, for example, try to extract maximum economic benefit out of them in the short term, but you think about the relationship in the long term and how you want to use that. When you come down on their side, those kind of moments of truth, those all add up and become part of your brand. And then when you get to scale, people talk about this stuff and it becomes real. And so I think when customers look at Octopus Energy, they see a mixture of fairness, they see renewable energy and an outward commitment to decarbonisation. They see that we are kind of almost custodians for them, and that we're different and that we're disruptive. So that maybe that's the sort of customer perspective of Octopus Energy.
So you highlight the promise of steady and low costs, and you refer to obviously the purpose very strongly here. You alluded to EV charging as one of your next business areas. Do you want to just give us a brief sense in how this helps further expand your business model?
Totally. And electric vehicles, and it was very interesting hearing May as well and all the stuff that Singapore Power is doing in electric vehicles, because obviously it's a clear adjacency for energy utilities, and it's a massive part of the transition. We do lots of things in this area. So first of all, we have an electric vehicle business where we actually lease electric cars to customers and businesses, corporates as well. So I think that's a model that works well in a new sector where the technology is constantly changing and you have a lot of disruption. We also have home charging packages. So, for example, where the price of electricity will follow the wholesale curve on a day-ahead basis, and so the customer can take advantage of the lowest rates. And that can be done almost manually by the customer or fully automated via an API that controls the electric vehicle charger. We have a vehicle to grid trial, which is more to kind of demonstrate how that can be used to balance the grid. I think many would agree that vehicle to grid as sort of mass market technology may be a few years off. And we also operate an electric vehicle charging network in the UK called Electric Juice. That allows other public charging networks to come and be part of a broader Electric Juice proposition, which is Octopus. And then effectively, whenever a customer charges at any of those partner networks, the charge will be picked up and it will come through onto their home energy bill. So you have a consistent customer experience there and it's frictionless. So electric vehicles are a big area of disruption and absolutely, something that we kind of really believe in.
And your own assets in that space. You do own, you have just mentioned that you own assets. So you do own a fleet of e-mobility assets in this context, right?
Actually, we don't. So we're still more in, I mean, it's a good clarification. We're still more in the kind of software and kind of retail side of this. So we have a number of partners. So let me give you an example of, there's a company called Omi in the UK who have a smart charging cable. And what happens is when you plug that cable into your electric car, it will communicate via our API, and it will call for prices for the next day. And then the cable itself will make a decision about when to charge the car based on that price curve and also information that's given to it by the customer. Now, we don't own the Omi cable. That's owned by the customer. But the point is our platform allows other devices to connect into it and get this information.
Excellent. And Tim, I think what is the last point, and then I want to move on. We have a beautiful bridge here with e-mobility, but I think the last point you are this intermediator, but you have done it with actually going hand in hand with some key partnership through other utilities, through partnership with other utilities. So it's a very interesting model that you have there, and obviously the fast growth is just witness to the success that you have. Now I want to move on to Frank Balas, a beautiful bridge e-mobility. Frank is Emerald's specialist on IoT mobility, and I mentioned as well on issues including renewable integration. Frank, what excites you most in this space? We have heard May and Tim both refer to e-mobility as well.
Yeah, thanks, Christoph. So, well, from my perspective, Emerald looks to make investments into startups that are solving issues in industries that are being, where there's a lot of upheaval, where there's a lot of opportunity. And certainly, when we look at the sort of aggressive decarbonization targets, it's clear that electrification is a must in the industry. And, this electrification of everything really is causing major upheaval throughout the industry. And just as an example, it used to be that there was a nice clear line between the oil and gas industries and utilities, and it sort of fell on the lines of the oil and gas majors were providing the inputs for transportation fuel, heating, petrochemicals, and utilities provided, all the lighting, the energy for lighting, the energy to move stuff for our computers. But over the last few years, we've really seen a change in the way that sort of split has happened, where there's a huge amount of overlap between those two sectors. So, oil and gas majors are starting to buy up renewable assets, wind and solar. They're installing EV chargers and actually selling electric power to the, at service stations. And on the other side, the utilities are, starting to move into heat. They're selling electric heat pumps for water and space heating. They're providing power for the chargers that are fueling EVs. So really transportation fuel, if you want, which is displacing. They're also getting into green hydrogen now, essentially producing petrochemicals from electricity, and something that's, in the near future has the possibility to threaten the conventional methane steam reforming that the oil and gas majors do. And if you throw in top of that, changes in regulation, new market mechanisms, what Tim talked about, coming into disintermediation, distributed generation, more savvy energy prosumers, digitalization, then you have an industry that's completely upended. And that's a place where, startups thrive. And I think it's an area where most utilities, and maybe Singapore Power and Octopus excluded, don't really have the skills to, adapt to those rapid changes. Utilities are really set up to maintain large generation assets, and they're not really generally have the skill set to design power electronics, integrate cloud computing, AI, blockchain, these kind of things. And so this is really where the startups excel. Applying technology to quickly come up with solutions to sort of vexing problems that the industry faces. But they can't do it alone. And I think that's where, Emerald comes in. We kind of bridge the gap between startups and the large corporations. And in this industry, startups, they partner with oil and gas companies, utilities, vehicle OEMs, and a bunch of other players for things like finding pilot sites, financing pilot projects, or financing the infrastructure that they're designing, and of course, access to customers. A lot of the startups we work with, they leverage their technology to be able to access the types of customer bases that Tim talked about. And, one of the sectors that I've been pretty excited about over the last few years really is the electrification of transportation. And just to put in perspective, how big an impact electrification in the transportation industry can be for utilities, for electric industry. In 2019, there were about 1.9 gigawatt hours of stationary storage installed in the US. At the same time, there had been about 48 gigawatt hours of batteries driving in the roads in the US. So this huge, amount of batteries rolling around, really not being controlled in a smart way. And that's only 1% of passenger cars in the US. So really a huge impact that can be detrimental to the grid if it's not managed properly, or can be a huge complement to integrating renewables into the grid if they're managed in a smart way. And I think, Tim talked about how they're already doing a lot of things to integrate EVs in a smart way. And I think startups are, sort of key to being able to develop these kind of technologies. So, On the automotive side, though, the market is still nascent. The technology in the car is pretty mature and is now being developed by large corporations. So the Chevy Bolt that I own, for instance, 40% of that the vehicle value added is really produced by LG in huge numbers. So it's a little bit difficult for startups to play in that sector, but they're in the drivetrain itself. But I think there's still lots of opportunities in automotive, but for startups. But one of the areas in transportation that I find particularly sort of ripe for disruption by startups is in the heavy vehicle area. So in the heavy vehicles, as opposed to automotive, the industry is less homogeneous. So you have a lot of sort of fairly large niches that need particular, unique solutions. So in earth moving, for instance, how do you replace hydraulics with sort of electric actuators? The duty cycles are different. They're, very heavy, rugged environments. And so one of the examples, maybe that I'd like to bring forward is an investment that we just recently made into a company called Rhombus Energy Solutions. So Rhombus is a US-based company that does whose specialty is DC fast chargers for heavy vehicles, trucks, everything up to sort of mining vehicles and down to delivery vehicles. And specifically, they do V2G, so vehicle to grid capabilities. And sort of to illustrate the collaboration between large utilities and startups, one of their customers, an East Coast utility, is actually buying school buses right now and leasing them back to school districts with the proviso that the utility can manage the chargers once the bus isn't rolling. So they're able to charge and discharge the school buses during the summer or the weekends or off hours, and actually, just turns out this is a pretty big market. The sort of municipal buses, they're about I think something like 60,000 of them in the U.S. There are about 480,000 school buses in the U.S. So a really nice beachhead for a company like Rhombus, and Rhombus really leverages their relationships not only with the utilities but also with bus OEMs to access the customers, these school districts, and also then to help finance the chargers themselves. So Rhombus doesn't pay for the chargers; it's either the OEMs or the utility itself that comes up with the cash. And once those chargers are in place, then Rhombus, as a partnership with the utilities, is in a great position to upsell those systems. So then expand beyond just EV chargers to include all the power electronics to turn that sort of school or whatever it is into a little microgrid, including chargers, stationary batteries, and possibly backup gen. So really excited about the opportunities in this space, and thanks again for being on the panel.
Excellent, Frank. I think what first of all, you show your excitement about obviously the electrification all over, and I think your bus example with batteries. First of all, you tell us that there is probably a factor 20 or more in mobile batteries compared to stationary batteries, and that whoever starts controlling that through fleet approaches has obviously a massive opportunity in becoming a player very fast in the storage context, much more so than if you go after stationary storage. I think a very, very important point there. I want to move on. We are in the heavy duty, and when one says heavy duty, obviously the other question is, isn't there hydrogen in that space as well? And we have looked at the digital side, we have looked at disintermediation, we have looked at electrification, we have already covered a great number of the 5 mega trends. The green molecules is the next one. Philipp Hasler is our Emerald sector specialist with deep expertise not only on hydrogen, also on storage. So Philipp, give us your sense on where we stand with some of the hydrogen issues that keep you awake at night.
Thank you, Christoph, and glad to be on this panel as well today. So as electrification of transportation, hydrogen definitely also has the same potential of disruption of entire industries because it goes across multiple industries. While a lot of people would agree today that electrification is somehow inevitable, the quest is still open for hydrogen. And I think it's fair to say that today we are in about the third wave of the hydrogen economy. And as you all know from the last wave in 2000, we have seen some successes with companies like Ballard Power or Plug Power, but the actual commercial breakthrough has been somehow limited. So what has changed since then? And there are several reasons for that too. I think I want to mention here shortly. One is clearly the climate change. So I think it has become now fairly mainstream that the decarbonization of the industry is a must. And of course, hydrogen plays a very significant potential role in that, being it in transportation, in the production of industrial goods like steel, or in the production of fertilizer for the agricultural industry. So this is clearly one thing, and there is a massive funding available and money already invested. I will show you a couple examples later. So clearly that has been a significant change since 20 years ago. But I think what is more important is kind of the understanding or realization of the power of mass-scale production. Over the last 20 years, we have seen a plummeting of the cost of renewable electricity, less than 1/10 of what we had seen 20 years ago, and we are not yet at the bottom. And so in many areas, actually renewable power, being it from wind, solar, or other forms, is the cheapest form of electricity that we have. And in certain areas, it's even cheaper to produce hydrogen today from electricity, from renewable electricity, than from steam methane reforming. So finally, we do have a tool in hand which allows us to produce hydrogen in a carbon-free manner at lower cost or at the same cost as we have it today from steam reforming. So what does this all mean, or what actually has happened? So there are a couple elements. I mean, one I wanted to mention here is the Green Deal from the European Commission. This is a huge pledge to the decarbonization of the industry. Over €1 trillion has been pledged for that initiative, and hydrogen is part of that. And alone for the electrolyzer part, there's a program in place which foresees an increase of the electrolyzer capacity by a factor of more than 500 over the next 10 years. And in transportation, we have seen countries like China that invest another $17 billion just in fuel cell developments after they have invested already $12 billion to date. Or in South Korea, we have one single company like Hyundai that invests $7 billion into fuel cell production capabilities for fuel cell cars. And even small Switzerland has a lighthouse project in heavy-duty transportation with fuel cell trucks. So there's this consortium led by Hyundai, where over the next 5 years, over 1,600 trucks will be put on the road to actually provide carbon-free transportation fueled by hydrogen. But I think the most interesting development is recently has been occurred in Saudi Arabia, where A Products, Aquapower, and Neon announced the build out of a renewable ammonia plant worth $5 billion, producing 650 tons of ammonia from renewable energy today. So this is really a leapfrog project. And I think it clearly shows that there is a lot of momentum in that. And I could extend that list and talk for hours about other projects, but I will stop here. So the question...
Thanks a lot, Philipp. And I think, you just referred to the Aqua. We had Paddy, the CEO of Paddy Mountain, the CEO of Aquapower in another interview recently, and another event. And I think what was impressive was that obviously he's referring to a 1.5 cents per kilowatt hour solar electricity, bringing him to, obviously he's focused on green ammonia, but he can deliver an equivalent of below 3 euro per MBTU equivalent of energy to the user, and that is obviously something is massively competitive at this stage. Becomes massively competitive. Then it comes from special conditions. I think you make the point very clear. But I want to go to discussion, and I think we are at the Startup Energy Transition Week, and obviously the question is, the question I'd like to ask now, there is different areas and different roles in the industry. Some areas are really, and Frank has alluded to that, but I think also Tim and May have made some points, some are really prone for startups to be successful, and others are less so. And I know, Philipp, we had discussions in the past where you thought in some areas, particularly in the hydrogen space, there is very mature spaces where it's hard for startups to come in. Some other areas are massively dynamic, and that what I'd like to get from all of you, and then perhaps start with Philipp, but what I'd like to get from is a sense in which areas do you see appetite to work with startups? In which areas do you see real opportunity for startups to be successful? And if you can help, structure the thinking around that, would be great. Philipp, can you start perhaps giving us?
Sure. No, as Frank alluded to already, I mean, some of the deficiencies of hydrogen is the efficiency. So everything that increases efficiency will be in favor of for startup companies. And I think startups are quite good in inventing, developing new technologies that are more effective, that are easily adaptable to other applications, but they're not good in scaling that up or in rolling that out into the market. And here clearly is the opportunity for startups to collaborate and work with large organizations for the kind of the next generation products. But I think one of the underlying challenges, at least in hydrogen, is we don't know yet today what is the product at the end. Is it hydrogen is an energy carrier, but is that the product already? And I think this is a joint effort of both parties to find the right use cases, applications where actually hydrogen makes economic sense today. And my view clearly is wherever where you can gain efficiency or not lose efficiency, this is where it plays out well. So that could be as a fuel, for instance, in steel manufacturing, or it can be as a chemical product in manufacturing of fertilizer or petrochemicals. This is where the efficiency losses are lowest, and also where we do not have infrastructure issues. I think this is one of the learnings also from the last wave in hydrogen, that the cost of infrastructure has been discussed, but it has not been acknowledged. So wherever we can use existing infrastructure, this is certainly a sweet spot where both startups and corporates can start to work with.
So help us rethink infrastructure, and innovation that helps enable that is obviously at the forefront of interest also from those infrastructure owners. May and Tim, what are your thoughts on where are you most keen to work with startups, and are there areas where you're not keen at all? For instance, cyber, is that a delicate issue to work with startups? Give us a sense, where are you keenest to work with startups, and in which area you may see it's more problematic? May, can I put you on a spot? I think you're on mute.
I was just sure. Yeah, sure. Go. Can you hear me?
Yeah.
Hi, can you? Okay, great. So I think Philipp talked about startups and how utilities work with startups, and you're absolutely right. We work with startups because they are agile, they provide new solutions to utilities, and on a win-win basis, we provide them with that market base for them to be able to then bring the market and proliferate their solutions through a big company like a utility. So we see that working with startups provides a win-win on both sides of the table. I actually would look in terms of the solutions in two categories. One would be technologies that are enablers, and the other one would be disruptive technologies. And I think there's a place for both sort of technologies and both sort of solutions from startups. I think Philipp talked a lot about hydrogen, and which are game-changing technologies. And obviously, those are very sexy technologies that we want to be able to have take an early stage in terms of piloting. And there's always a place for such disruptive technologies, because that's going to be what the future of energy is. But at the same time, we also keep in view that startups can also introduce incremental technologies that will help us in day-to-day functions. We run a big company with huge operations, a lot of processes, and if we can, for example, use artificial intelligence or machine learning to be able to operate more efficiently on the field, that itself would be a huge difference to how we operate our network and deliver that value to our customers. I'll give you an example. So recently we are working with a company called Utility, which is a US startup. And Utility provides a non-intrusive meter and communication device for data retrieval. And this provides us with real-time measurement of energy and water consumption. And we are piloting that solution in a residential block in Singapore. And if it is successful, it will really enable us to be able to deploy our solutions a lot more quickly and roll out more cost-effective sub-metering solutions. So I think there's a place for technologies that are sexy, exciting. Maybe 10 years it'll be there, but at the same time, anything that's incremental helps us on a day-to-day basis. There's a place for it as well.
Incremental, I think the keywords that we have heard so far, and you have just added the incremental innovation point. May, I think we have heard before everything that is disruptive. We have heard before the question of customization, disruption, incremental. Tim, is there another word that you would like to add to that list? Are you working? You were a startup yourself a couple of years back. Are you already working with startups again?
I mean, it's an interesting question for us, because we're a bit like a sort of overgrown startup at the moment. So we're a scale-up business, but we still very much have a startup DNA and culture. Where sort of people wear multiple hats, and everyone kind of piles in, and it's a fairly informal organization structure and those sorts of things. So in some ways we still think of ourselves as a startup, despite being a reasonably sized business now. I think for Octopus, there's the slight difference, I guess, is that we are kind of a technology company to start off with, and so when we encounter others who are building software or working with technology, really the decision for us is, could we build it ourselves? Is it kind of worth partnering, or do we just buy this business and integrate it? And generally what we find is, in the software domain, the middle option, which is the partner option, doesn't work so well for us, because as a technology company, we want to build and control and own this technology ourselves. Where we do find working with startups is helpful are on areas that are just not part of our kind of core DNA. So hardware, for example, I've already mentioned. So batteries, solar panels, heat pumps, EV chargers, everything around this space. We're not about to go and kind of either produce that hardware itself, which is hardware is a difficult game, or to sort of start developing it. We would rather work with partners there. And the other area that's maybe less obvious is around acquisition channels. So finding ways to reach customers through kind of, I might call them startups, let's just call them small businesses that talk to different types of customers and customer groups. So I guess for Octopus, it's sort of, there are some areas where we clearly prefer to partner, and there are others where actually, because they're kind of close to our DNA and what we do anyway, there's almost some stable relationship there where we'll either kind of work with them or we won't, or we'll potentially try and bring them into the family at some point if we really like them.
Excellent. Well, is there some on this question, some last remarks, Frank, Philipp, or anybody, any last point on the question of working with startups, areas that are preferred or areas that are impossible?
Yeah, maybe speaking a little bit more around the business model, actually. So, I mean, obviously, for startups, capital is expensive. So, capital light solutions are always great. And I think at the same time, you want to find a solution where you can, build strong IP. So around materials, maybe the area that Philipp operates, sort of materials IP is one place where you can create a strong IP sort of picket fence if you want. The other areas are obviously software, and Tim talked about hardware being difficult, and I totally agree with that. That is true. What we do see though is hardware companies that build some hardware device. For instance, we invested in a company called Visedo that was doing drives for heavy vehicles. But really the critical factor was the software that went into it. So they're actually able to outsource the actual manufacturing of most of the hardware and then build a strong IP sort of landscape around the stuff that drives this, really clever sort of power electronics, this kind of thing. So I think, when we look at companies, it's a lot of it is how do you have the biggest impact with the least CapEx expense, and I think materials and software are two ways that you can do that.
Mm-hmm. Yeah, maybe another point on what Tim just mentioned on this competitive or collaborative situation. I think it's important for the startups to find their role in the supply chain or in the value chain. So how much value is being created, what I can keep on my own. And in one case, it's like what Frank said, that you have to build an IP position about a certain component, a material, or maybe an algorithm, or in other cases, it is the customer base. But I think what is important for a fruitful collaboration is that both parties, both the larger, smaller ones, agree and understand what is their role in the supply chain, and they're not eating each other's lunch and understand who is doing what, and also acknowledges that what others can do something better than what I do.
Philipp,
this is an important consideration.
Excellent point. Thank you, Philipp. I think we are coming close to the end of this session. If I would like to summarize, first of all, I really enjoy this setting. I think it's exactly what we at Emerald try to bring together. We have, on the one hand, utilities, we have disruptors, we have our sector specialists. We bring those together to generate more value. The one thing we haven't much spoken about is the degree of collaboration that is really important in the sector, because most utilities, and I think that's my last point to this session, are actually too small to do it by themselves, which makes collaboration very much more difficult than in an oil and gas area, where you have 2 orders of magnitude larger companies around than in a typical electricity context. So collaboration really matters. But I think what we have seen in this sector, in this session, is that the 5 mega trends, the decarb, the digitalization, decentralization, electrification of final demand, but also green molecules are the mega trends. We have seen them illustrated. I think May has, as a digital archetype company in the utility space, I think you have given us a great sense of where you're moving, how you're capturing your customer. I think Tim, through platforms and through that, provide more value and probably increase your future opportunity as well, electrification-wise. Tim, I think you have made the point that you can be a friendly disruptor in a way. I think by working with incumbents and yet be massively ambitious globally. I think it's very impressive what you're doing. We have gone to the e-mobility context and seen that e-mobility can be approached through the lens of storage, and a number of startups doing that. The school bus, Frank, your school bus example is certainly a brilliant one, where fleets become suddenly part of a planned system management and battery storage management system. And Philipp, I think you have given a prudent outlook on hydrogen. I think seen a lot of great development. You have explained why we have more dynamics, but obviously I think you have a cautious outlook still on that side as well, and referring as well to incumbent technologies that need to play their role. We have asked the question about where are most important startup areas, and I think what we heard is probably it's easier to do it on the IoT software type of side than on the hardware side. Tim mentioned the middle option, the partnership, doesn't often work. It's either a client or a full integration often that works. I think it's also an important message back. Incremental innovation is key. Customization, everything that disrupts is a typical startup space. And then obviously, I think last but not least, we need cooperation, as we see in a context of the GET Alliance that we are obviously building up with a lot of excitement, the Global Energy Transformation Alliance. It's a great pleasure to be at the set, the Startup Energy Transition Week, and I want to send a warm thank you to May from Singapore, Frank dialing in from Toronto, Tim from the UK, and Philipp from Zurich. Thank you very much to all, and good continuation with the event.